Good morning, this is Beating Wall Street. Today we raise a question. Are we headed into a financial crisis? Well, I think that this is on the Fed's hands. I'm very concerned because yesterday we heard both president of the two presidents of the Federal Reserve, Rafael Bostic, Atlanta Fed president, and Mary Daly, San Francisco Fed president. They send a really strong and clear message. They are not going to pivot. What does it mean? Uh, the interviewer question to them uh, that the market is pricing in rate cuts in 2023, and basically they say the markets are wrong. They are not going to pivot. They are not going to cut rate in 2023. So they want to raise rate in a level around 4.5% or 5%, more or less, and they stay there for quite a bit and see how the economy reacts, and not cut rate until in 2023. But this could lead the global economy in a financial crisis. They, there are several reasons for this. The first one is the strength of the dollar, which is likely to continue due to the hawkish tone of the Federal Reserve. Second one, we see another important point in the markets. The OPEC are going to cut the production of oil in 2 million for barrel per day. So this means higher oil prices. Probably Goldman Sachs said the oil price is going to 150 dollars per barrel. Um, this is bad for the economy. If the oil rise until that level, the global economy is gonna be hard. So this is one of the another mistake of the Fed. I can't believe why they take this tone. So the bull case scenario needs the Fed to pivot. If the Fed does not pivot, we enter in a new scenario. The new scenario is very likely a recession in the United States because the economy is hurt. It's in a good shape, but gradually is being hurt. We see in the job opening uh, in the job opening that decline sharply for over 1 million. So the companies are not looking for so much employees, and this is a reflect of that the strength in the job market is losing a little bit. We see the PMI and the ESM indicators below 250, which indicate that the economy is really hurt. Uh, we also see there is a mix of data, no? Because we also see yesterday the non-farm payrolls above the expectation. So it's difficult to to understand what is happening in the economy, but I think that is slowed down just because of the rise in the interest rate, and we will see the deflationary pressure in the incoming data. Commodity prices, except from the oil, are going down. The core prices, the CPI expectation for the future is close to 2%. So we see clearly deflationary pressure. We will see the earning season of the company, but clearly is going down also. So in this environment, if the Fed continues to tighten more and more, we will see the economy hurts. So the bull case scenario requires the Fed to pivot. If they continue, the dollar is going to strengthen. Now the signal with the oil market is not good also, and this could lead the U.S. in a recession. It could break something, they are going to raise rate until something breaks. We will see the false scenario if they continue with this path. A really tough environment. So the bull case scenario is in if the market, if the Federal Reserve pivot, but we have to take into account that if this doesn't happen, we have to change our view and become bearish because and sort the markets because now the markets with this rally that we have seen this week and probably is going to continue, the market is discounting a Fed pivoting, and we have several indicators basically in the Fed president Atlanta, San Francisco, Jerome Powell in his last statement that they are not going to pivot. So when the market relies of that, this is gonna be a really bad news for the markets. We have to be prepared. We take benefits from this rally, but now we have to be a little more cautious. Um, See when the market realize that they are wrong about the Fed. Sadly, the Fed is wrong. Is gonna make another mistake. Um, the market is going to pay the price, and the investors are going to pay the price. Thank you so much.